right, now we explore a very relevant and troubling trend in Africa's startup and venture capital ecosystem. Although venture investment is increasing, we're seeing women-led startups are still dramatically underrepresented in what is being funded. According to a recent Briter report, in 2025, 3 out of every 4 venture dollars in Africa has gone to male-led startups. This has serious implications, not just for fairness, but for economic growth, innovation, job creation, and inclusion. So today, let's dig into what causes this imbalance, what is being done, and what needs to change for women founders to share more equitably in the growth of Africa's venture market. Join us for this conversation. We have Sholakwe Kingpelu, who's a co-founder, Harvest, joining me right here in the studio. It's great to have you. Good morning.
Thank you so much, Ladi. Good morning.
Fantastic. So I'm a man, and you know, the selfish side of me would say, it's okay. Men are getting funding, but no.
I get it.
We want equity.
Yeah.
You know, we want everyone to get their fair share.
Yeah.
At this point, and looking at the data, we see a share of venture dollars in Africa going to male-led startups in 2025, 75%. Share of funding going to women-led or mixed-gender founding teams, 25%. Yes. So the data is speaking volumes.
Yes.
There.
Then women only, or solo women founders, about 10%.
Solo women founders.
Yes.
So that's even lower.
Or women only.
Right.
It's about 10%.
Right. So why do VCs doing this? What don't they see value in women-led?
Who are the VCs?
Who are the VCs?
I mean, that's where we start from.
Are they mostly men?
Actually, yes, that's the answer, right? So you look at the ecosystem, and then you look at the makeup of the ecosystem. The VCs raise largely from the limited partners, who are the capital providers. The capital providers are mostly men. The VC operators, who are, the GPs, they are mostly men. And so this is where the buyers seep in, right? It's implicit. It's almost, some people are listening to the conversation and they're like, no, but I don't deliberately make this decision. I fund who I see. But the truth is, Ladi, you have some bias towards your friends, your people. Like, we know our people. We say it, even on the street, like, know your people. Your people, the people who've got you, right? So the challenges are, the implicit bias that seep into the ecosystem of, venture funding itself. Limited practitioners as well. So when I say limited female founders who make up for, I think, like maybe 1 out of 10 founders. So you just see that there's some scarcity both on the demand and supply side. And then there are, several other factors too that we can talk about further.
So when we look at the ideas, some of the, businesses, some of the women come up with, what are they normally like?
Say that again, I'm not sure.
The businesses, the women,
yes,
come up with, the ideas,
yes,
they bring to the table, the kind of business they want funding for.
Yes. Oh, they are diverse, but we've seen more women in AgTech, so that's one interesting ticker we are celebrating. For instance, AgTech, particularly women-led AgTech, raised significantly better last year than now. But we have women in fintech, we have a lot of them in health tech, and other different business sectors.
So women don't do financial services that much?
Yes, we do. I am in fintech. I'm co-founder of Harvest, but there is also that scarcity in fintech, and fintech has the dominant raising capacity mostly, but we've seen marking closely to that clean tech, renewable energy significantly on the continent. We understand why that will happen. But away from that, I am a woman in fintech. 2021, 2022, we had this, bubble pretty much, especially in Africa. 2023, we had this, funding winter, as we call it, funding froze in venture capital ecosystem. And when last year, when things started warming up again, investors preferred investing in growth companies, people who are raising their Series A, their Series B. Now, here's the challenge, and it is where it's tricky and the conversation is very tiered and layered. There are fewer women in fintech. Most fintechs, are at the seed stage, pre-seed, early stage stages. The investors came back into the market and wanted to invest more in growth businesses. So you see why there will be some sidelining, for different reasons, valid, perceived, and other reasons as well. So it's a layered conversation, but you had said, and I like the way you led, like we can decide to leave this conversation on the table and say, well, men are raising, why should the women bother? After all, they end up in a man's house. And so if the men raise the money, they'll take care of them.
And they end up employing a lot of women to the company.
Yes, not necessarily in most cases, but then those are the societal biases that come into. And so we believe that we keep doing the work. The women founders, we should be more transparent and, know our numbers, because those are some of the challenges that even we've gotten feedback on. Know our units of economics, get our data room ready, evaluation, all of those things, like really, really stress test our numbers, the businesses. And I believe that with a lot of advocacy, and sound business practices, will significantly reach better.
So if you're a woman trying to raise money, you heard what you need to do. Going forward at this time.
Absolutely.
So, looking at the financial services, ecosystem, Nigeria and in Africa, what would say there are a lot of fintechs?
That's correct.
There's so many.
Globally, actually.
And globally,
yeah.
At this point, do you think VCs are still, keen on, coming into that sector at this point?
Yes, and for good reasons. I say finance, money particularly, because finance deals with money. Yeah, so I say money is an emotion, is a tool, is a core, is power, is currency. So naturally, it would be active. Let me use the language the kids use. It's quite active. Right. So you'd see people follow where there's activity. Right, it's finance. You've been here today. There's lights. You've bought this. You've done a lot of transactions. Transactions are moving, right? And so when you have that scale of people, doing transactions, you likely want to, follow follow the money, like they say.
Right.
That's it. But what we need to do more of is also look at, and that's one of the things that Harvest is solving for, look at the overlooked sectors, look at the niche sectors. Who's looking at the, female farmer, for instance, who needs to expand? Who's looking at the local micro businesswoman who just maybe she's 200,000, trading with 200,000. So the banks wouldn't touch them. But the truth is that these women, they have the acumen, they have the grit. How then do they scale? And that's where we come in to say we need to build, digital financial footprints for them. Pretty much like we are creating a pipeline so that they get funded by, the traditional financial organizations. So we, offer them credit and financial literacy.
Right. And offering credits, at this point, I know this will also concern you.
Yeah.
Because the MPC, they're starting their meeting today. Tomorrow we'll get a decision. We've seen private sector call for a cut in interest rates, so that we can have a breather, at this point.
Yes.
But they're saying it might be too soon to cut. Maybe we should hold again. Keep it at about 27%.
The numbers are unbelievable. I pitch, on global platforms, and when we tell them and this is even traditional financial institutions, you need to go and see the local money lenders. You need to go and see the unregulated money lenders, what they are, lending at. It's those
are talking 60, 70%, about 100%, or even more.
200. People are lending 20% monthly, because
those are sharks.
Because it's crude. Shylocks, like they literally want a year. And that's why we need to do better formally with this interest rate, so that we can have these people come into the right markets, lend at reasonable rates, and then do better at trade and markets. It's smart economics, right? We can't keep hurting the numbers and pushing more people out of the financial system. We are outpricing them. That's it, basically. Because at the end of the day, they have no choice. They go for this funds that they have no business touching in the first place. So,
right, now we see the FCCPC, they've been
yes, there's a lot to do there.
lifting weights, trying to catch those that are trying to embarrass those they are giving some of these loans
I mean,
to.
in the past 4 years, it's been all shades of circus.
Yeah, with pictures being posted, obituary picture because you're owing somebody money.
I mean, that has ran a lot of people even into mental challenges that are less spoken of. And so that's why it isn't talking about, this is not discussing gender, this isn't talking about, it is just smart economics. It is GDP positive. It is job positive.
But they're also scared of stoking inflation again. Since we've been seeing inflation numbers tending downwards with the data at this point.
So that we
don't want to stoke inflation back and putting excess liquidity into the economy. It's like a delicate balance.
I know it's not an easy job, right? But it's got to be done. So, we believe that they have the right people there.
But so far, interest rates have been, on the high side, in the country. So how do you, as a business, navigate, giving credit?
What we do is blended finance, right, which makes our job a tad challenging. So we take finance from our banks, the traditional financial institutions, take like low or no interest funds, from DFIs. It takes a lot. It isn't easy. You're probably talking to 100 people. I am at a conference in October, for instance, social capital conference, to fundraise, to talk to, family offices, DAFs, donor funds, so that we can have a mixture of funds, right? So if you've taken something at 32, not one is 0, right? And then another is at 2, that way we target at Harvest, we target having the cost of funds should not exceed 18, so that then we can lend out, credit, lend out at a fair price, right, for the niche of women that we lend to. So you see that it's a lot of work because it's not easy as, you match, you take from the bank and then you match to them. We are, diffusing the funds because that's what makes sense to that. The woman on the streets, the woman on the farms. Otherwise, you're just pushing them further down into the poverty cycle.
Right.
And that's why we're a social enterprise.
Exactly. So with the women you've dealt with, so far, are you optimistic about, passing more credit?
Absolutely.
To the women?
We've not even scratched that market. First, they pay, right? They are credit positive. The challenge is just that most of the time they are afraid. Women typically, when you talk about finance or credit, women are asking you, what's the least that I can take? Men say, what's the highest amount I can take? So you see the behavioral patterns in all of it too. But in numbers, with women making about 40% of SME.
So the women don't really like high risk.
They don't like high risk, which is why we now have to go and get, this blended finance for them. So, right, we are doing this as private sector operators. How can we get, the public sector, other parties to layer on funds like this to allocators like us, right? So that we don't have to do all the hard work by ourselves. So then they don't like they don't take high risk, but they quickly, because they don't like the risk, so they are paying back. Right, so the NPL isn't bleeding. If there's any reason, it is because of things like biological pauses or some challenges. For the past 2 weeks or 3 weeks, I have been, because I'm a nursing mom. I'm a mother for the 3rd time.
Congratulations.
Thank you. And so these things come because we are nurturers, we're caregivers to the ones who have chosen to. So this biological pauses or lifestyle that doesn't make growth linear as it is for other people or men. Like I would say, at least my husband, he can afford to go to work and do everything. But then I am the one who knows biologically what has happened to me in the past 2 years. So some of these things affect work. So how do we make spaces? How do we create chances for some of these things as well? So overall, it is an ecosystem conversation that should be looked at and then make room. So we are not saying dumb down. We are not saying lower the barrier, but how can we find balances for the natural challenges, the bias out there, and there's so many challenges that a lot of women face when it comes to accessing affordable and easier finance.
Right. So let's not make the funding circle the boys' club. Let's open up.
Let's open up, right? I agree.
For the girls.
That's it. That's it. Let's open up.
Fantastic.
And let the girls socialize more too.
Right.
Yes.
Okay.
Yes. I mean, it's a give and take thing. Let girls socialize more. Let's not stick to, because I've seen checks. I've seen boys exchange checks at, just over whiskey, right? Maybe they're not seeing the check, but the truth is they gave word,
right? And
then they go back to honor it, right? So
let's get a girls' club that can operate in that manner.
We have a lot of them now around, but then let's have more, and then let's also, like I say, get the sponsors. We are trying to diffuse power. We are not trying to upturn things. The people who are the chair cutters are mostly men, right? So how can we have more of these men to spread out the wealth and allocate to gender-focused or gender-balanced funds?
Right.
It's important.
All right, we'll keep tracking. Hopefully we'll see some growth, going forward. Thank you so much. It was great having this conversation with you, Sholakmi Akinpelu, co-founder Harvest. Thank you for coming on today.
Thank you, Ladi. It's a pleasure.